Hello everybody, this is Brandon with Crypto Trades and Tech with another weekly update here. So we've got a lot of news here about Bitcoin this week. Wanted to keep a really good pulse on what Bitcoin is doing because that's going to be critically important as well for our rotation into altcoins. We've seen a lot of altcoins have a lot of really strong price action here this past week, especially Layer 1, and then the metaverse is kind of a big theme this week. So I'm going to give you my thoughts on all of that before we get rolling. Of course, as usual, I'm not a licensed financial advisor. Anything that you hear in this video today here is just my opinion about what I see in the markets. If you were to take trades blindly based on anything you hear here, you're going to end up losing all your money and living in a van down by the river. Now, first thing here, Bloomberg put out a little article about crypto gigs popping up around the nation. You can see here currently it looks like the typical California, LA, and San Francisco, Silicon Valley are kind of leading the way. But you have New York as a bit of an epicenter of crypto hiring, right around Wall Street, I suppose, which would make sense. Miami is becoming a big center. You got Chicago, and then Austin, Texas, and Denver, Colorado as well, Seattle as well. But there's a lot of jobs. Very interesting that there's so many jobs popping up in the space. Now, on the Bitcoin side of things, we do see that according to Crypto Quant here, we have whales starting to sell some coins. It is my opinion, and we'll talk about this more related to a thread I put out, that this is a pseudo manipulation to suppress price at the last phases here of accumulation before they let price go a little bit and then begin a pseudo distribution phase late this year, early next year. But there's some data that I wanted to show around that. But just know that it does look like whales are getting a little more active here. Price is rising and whales are selling. So that's sometimes a bit of a sign of caution. I did put out this tweet earlier that says, I'm feeling good about where we're at. Basically, we're just consolidating right above this key area of support. This goes back to the what was key resistance earlier this year. It's now become support. We're coming into the weekend now, but we're consolidating above the support, and on-chain continues to be very bullish. This little bit of whale selling is probably the biggest red flag. But leverage has been fairly reset. It was very, very high. It's come back down on these little couple of flushes here. I think perhaps just a period of consolidation with a few small flushes may be enough to reset leverage as people get bored and start to close out their leverage positions when we don't break out. But the problem is we've had this false breakout here. And then we saw, in prior bull runs, in Bitcoin's bull run history, whenever it breaks an all-time high, this happened in 2011, 2013, and 2017, it would just take off. Maybe have a quick retrace to retest the prior all-time high or some area near that, and then off it would go. And it was a constant upward momentum. Well, what we're seeing now is a different pattern of price shooting up and then coming back to the downside, a false breakout. So currently what we see here, if we position the 2017 cycle, now we know Bitcoin has some seasonality to it. It very often will bottom in the summer, especially in July. It has a pretty strong October as a really common theme, and November through December also can be very strong. So we saw this play out. We saw a July low in Bitcoin, and then we saw some really strong price action through mid-September, and then a bit of a sell-off, and then a very strong October, and a false breakout, all-time high breakout, and then now we've had a little bit of a sell-off and consolidation. But if we overlay the 2017 fractal, a lot of people who are expecting a blow-off top into the end of the year, currently price is 65% behind. If we were to be on pace with where the 2017 price action was by percentage gain, properly scaled from the July low, we should be closing the door on $100,000 right now. But instead, we've broke out to 67 or so thousand, and we've retraced all the way back down to the 50s for a short period of time, but holding support right around $60,000. So this leads me to believe that we are still more likely to have a rolling top into early next year than a blow-off top. I put out a pretty large thread discussing this. And here's what changed. I think people saying, this cycle is just like the prior cycles. There's so many similarities. There are a lot of similarities. However, early 2021, we saw a shift in how the patterns play out. We saw more aggressive price action early than what we had seen in prior bull markets, except for 2013 perhaps. But then we saw this odd behavior of breaking an all-time high, and instead of breaking out and running like we had always had before, of running a little bit, coming back to test that area, and then running again and testing that area, running, we had a breakdown and then a false breakout again, a breakdown, a lower low, and then a false breakdown. But then on the other side, on the bottom side, we had a very similar false breakdown. If you recall, late July, we actually closed. There was a key weekly support level that a lot of us have been watching for a very long time. And all of these wicks were only hourly. They never closed a daily below any of these key support levels we were watching. We got both a weekly and a daily close below key support level. And immediately after that, price sprung the other direction. This is yet another sign of manipulation in the market. Now, there are people that follow these Wyckoff models. I'm not a Wyckoff expert, but they were telling us that this was going to happen, that there was going to be a spring event. They were telling us that this top was happening and that we were going to roll over after we put in this lower high over here. And sure enough, we did. And then we entered an accumulation phase. And then they told us that we're going to put in a spring low. It was going to look like we had confirmed the downside, which traditional TA would have said a weekly and a daily close. We're gonna go ahead and start to shift our gears and short into resistance, and then immediately we went the other direction. Then we had this consolidation in September and a quick break to the upside. I consider this a false breakout too because of how fast it happened. We had this very strong price action with this rolling kind of top here. We were losing a little bit of momentum, and that seemingly out of nowhere, we broke to the upside and then very strongly got rejected after a false breakout. And then, of course, here again, we broke the prior all-time high by a few $1,000s and then immediately started a sell-off. Remember, in past cycles, when you break out very large, maybe come back quickly to retest and then resume. That's the way that prior price action is played. We've never seen a pattern of breaking the all-time high and then immediately coming under it. So this is a new pattern that is now unfolding on Bitcoin that has not happened in prior bull market runs. Now, somebody asked me this question, do you think that leverage is causing this? And of course, leverage could be the cause of a lot of what's going on, but I also think that leverage is being used as a tool to further manipulation. If you think about it, if people buy Bitcoin but they don't put a stop loss in, it's very hard to flush people out from selling their Bitcoin. But if you can convince people to buy Bitcoin on leverage, then what you can do is get them to over leverage, and then you can take their Bitcoin by flushing the market and having them be liquidated. So that is a stop loss they didn't necessarily implement themselves, but this has happened time and time again where we get people over leveraging. The market is luring them in. I see all these incentives. It's interestingly timed to me when I see a lot of incentives around leverage on these platforms, and then shortly thereafter we have a big price spike and then a big sell-off and a large liquidation event. So that is a way of taking coins and funds, taking liquidity out of retail into maybe other stronger hands. Now we've seen a pattern of this where whales are selling and the price is slowly retreating, but leverage is increasing. So what's happening is retail is buying against the whales, and they're buying with leverage as large wallets are slowly selling and pushing the price down slowly. And this leverage builds. And then sometimes we have a quick pop to the upside, which really gets leverage really high, and then a very quick spike to the downside, flushing all that leverage out, and then this pattern continues. These are new patterns that have emerged in 2020 and 2021 that were not present in prior bull market cycles. Remember, in 2013, 2017, there was no leverage in the system. There were no options, there were no leverage. The CME options were launched at the tail end of the 2017 cycle, which a lot of people contribute to the end of that bull market cycle coinciding with the launch of those CME futures. And of course, we keep referring to the Fear Greed Index as well. We've been in greed or extreme greed for quite a while here. So this is starting to cool off finally. I think hopefully it won't take a big sell-off. It'll take a more consolidation for people to get out of extreme greed. And then that will allow us also probably to continue upward. On the other side, the fundamentals continue to look very solid. Namely, the biggest thing that I've been just watching is this constant drawdown of coins off of exchange. There are other, Will Clemente put out his liquid supply shock ratio. This tends to indicate that coins are going from less convicted buyers to more convicted buyers. This ultimately, what to me this shows is when we have coins coming off of exchange, these are more convicted buyers that are going to hold on for longer. And the less convicted buyers are the ones that, when you see coins coming on an exchange, that means they have less conviction and or they're willing to sell. This kind of signals willing to sell, and this kind of signals willing to hold on the way down. So with this on-chain fundamentals being very strong, I do expect at some point this accumulation and this manipulation will end. and the forces that be will let the market kind of do its thing, break out to the upside, and maybe have a very strong run through the end of the year. My concern for a lot of people is that if you're not actively on the pulse of real-time price action and the real-time fundamentals, that you may get swept up in the hype. You may be coerced to sell your Bitcoin toward the end of the year at a much lower price than you were hoping for, maybe $150,000, $160,000 Bitcoin, which sounds great. And that would be great for a lot of people, especially if you bought early. But I'm afraid a lot of people, when the price continues up and makes a new all-time high in early 2021, so say you sell your Bitcoin for 140, 150,000, and you see it break up and it's at 180,000, you buy back in. With this pattern of false breakouts and then sell-offs, I'm afraid people are going to end up losing a lot of their earned funds because they're going to buy in at 180, only to see it quickly turn around and go back down to 120, which they might have to sell at a little bit of a loss, and then see it go back up again, maybe slightly above 200, and then this pattern continuing. And a lot of people may end up losing a lot of their funds. Now, on the worst side of it, there's going to be a lot of people joining us very late that are going to be buying in at those high figures. Above $100,000 is where you're going to have a lot of people really interested and starting to buy. Probably the narratives around the super cycle and $1 million Bitcoin in 2022 will start to really ramp up. And then this pattern of false breakouts is really going to hurt them, especially because if they buy at above 100,000, they see price retreat to say 120, they may take a small win. And then they see price break back up to 180, and then they start the pattern of buying at 180 and selling at 150, buying at 200 and selling at 150. And now while the price has gone up, they've ultimately lost money because of this new pattern that people are not expecting. Another thing to consider is that we could still have a blow-off top because of the memory that we have of this rolling top. A blow-off top might psychologically be what ends up occurring. So I'm not going to discount that as a possibility. I think it's just a lower probability than people think. On the other side, a rolling top that looks exactly like early 2021 is also probably not likely. There's probably going to be different forces at play. The market is ever evolving and dynamic, but as well, it's very unlikely that we have the exact same type of pattern. So another thing that's going to cause a lot of problems for people is trying to play late 2021 and early 2022 as if it was going to match exactly late 2020, early 2021. Again, I don't think that that's going to be a good recipe for success because it's probably not going to follow those patterns very closely. Now, and more just red flags about the state of the market, I want you to hone in on something here. Late last year, so you see this was where I have my mouse right now, was September of last year coming into October. And you see the big run up we had in price in October through December. Notice the volume of trading that happened through the end of the year. So where my mouse is currently is early October. I'm going to scroll over here. The peak of buying was actually early 2021. January 2021 was a frenzy of buying. And then we saw volume start to decline. Price continued to grind higher in those false breakouts, but volume was declining. And then we had this big volume spike. This was actually the sell-off here, this big volume spike. But you see, so far early this year, we've seen a decline in volume. So we had the big selling spike, the big selling culmination with these two spikes right here. And then the price ramp up has seen actually a volume decline. And the big sell-off day was the other spike over here. We haven't had a big volume buying day. Now, early or late 2020, we had big volume buying days. But all of the price appreciation days so far in late 2021 have been low volume. So this is what also is a bit of a recipe for disaster for retail traders. When there's low volume, it means big players are buying a limited amount of spots, but leverage is rising. Price is rising on the back of retail buying on leverage. And then, of course, we see this pattern of getting swept out of the market. And this was exceptional here. This was a very high. This was the highest leverage reading we'd had since early in the year. And then that leverage got very quickly wiped out of the market. And then over here as well, we had some very high leverage readings coming into this all-time high breakout. And even here, as price declined, we had really high leverage right around here. And then you see that big flush out. So we continue to see this pattern of it's low volume, high leverage. So this is not a recipe for sustained upside. We need to see the next breakout needs to be a high volume breakout. Otherwise, we can all probably predict that if it's a low volume breakout yet again, and especially if leverage is rising, we're probably headed for another false breakout and a series of fakeouts. A series of shakeouts, I should say, and leverage liquidations. So these are all new metrics that we're all having to watch together. But please, if you would, take a look at this thread that I put out and comment on it. If there's something you think I'm missing or something you don't agree with, please let me know. Again, we're just all trying to figure this out together. I don't have an agenda in putting this out there. I'm simply trying to do my best to trade and to be accurate with my trading to continue to stack more sats. I want to acquire more Bitcoin through trading if I can, and I want to avoid losing any Bitcoin especially. Then to close on a bit more positive news, I just wanted to show this chart. The Ethereum Layer 2 ecosystem continues to just massively scale up. I'm starting to really lean toward, with Ethereum, with the EIP 1559 fee burn having probably now starting to cause this breakout to the upside that we're seeing now. With Ethereum and price discovery as it retreats to the prior all-time high, I'm going to be looking to be more active in Ethereum, especially if you look at the health of their Layer 2 ecosystem. Obviously, a lot of us were investors in both Matic and Loopring, some of these other Layer 2 scaling solutions earlier this year. It's good to see them coming back to life a little bit, especially Loopring here, which was lagging for a long time, having some really big gains. Really good to see this Layer 2 ecosystem continues to just explode. And then one of my other pet projects lately, obviously, is Elrond. I just wanted to share the founder of Elrond put out this tweet about the Maiar exchanges going live. And so, Elrond being a very robust Layer 1 chain, they're building a decentralized exchange on top of it. It's got a very clean UI. I like it quite a bit. I want to play this little hype video here. It just gets me hyped up. I hope you guys enjoy it. Well, that was fun. So I hope you guys are riding the Elrond train with us. Let's take a quick look at that chart, and then we're going to wrap up. So Elrond in price discovery here, I've got some fib extension levels I'm looking at. The next level I'm looking at for potential resistance is 343. And then, of course, if it were to retreat back into about 300 support, might be a good place to add if you're actively trading or buying the dips on this asset. All right, everybody, thank you so much. Again, Van by the river, please be careful. Do your own research. If you've made it this far in the video, please consider a like and subscribe, maybe sharing this video with somebody else. And especially if you're actively trading Bitcoin, consider, and you're telling others about Bitcoin, consider sharing the thread that I just shared about the possible manipulation. Let's try to prevent as many retail players as possible from getting swept up in a potential manipulation style, false breakout event. And I don't want to see people lose their hard-earned money in manipulation to larger players taking it from them. That's really what I don't want to see. It's really why I'm doing this. So if you could, please maybe consider sharing that thread just to help some people out so they know what to look for. That's the main thing. We all want to know what to look for. I'm not saying it's definitely going to happen. I'm not saying any outcome is definitely going to happen. I just want people to be aware of what we should be looking for if these things were to unfold so that we know how to trade around it, how to protect ourselves, and so forth. All right, take care.